Welcome back, investors, to Ticker Time News. I'm Adam, and thank you for joining me for the After Hours show. Oh boy, did the markets turn south today. It started out red and bouncing around, and it started to come back around late morning, and then boom, fell off the cliff. Just everything sank really hard. So if you are in the short side of the market, then you actually did pretty well today. And I'm just opening up the app here so I can show you an example here. On the screen right now, this is the S&P 500, right? So if you're going to short the market, of course, you can use options trading and go after different ticker symbols. But if you want to stay out of the options market and you want to take an easy way of shorting the market, then you can buy inverted instead of ETFs. They're called ETNs, and they track a very specific market. Like, for example, we've got the SPX right here, okay? So it tracks the S&P 500 exactly how it is. But if you wanted to short that and do the inverse of that, then you could look at something SPXS, right? SPX, get the cursor in the right place here. All right, SPX, and then an S at the end, right? And that brings up an inverted S&P 500. So it tracks the S&P 500, except when the S&P 500 goes down, you're making money. So it's a way to make money in a down market without having to go crazy and get into the options game, right? And the same technical indicators that you would use when you're looking and tracking how the market is actually moving, they're the same indicators that you can use for tracking the market while it's going down, okay? So vice versa. So for example, SPXS, that ticker today was up 6.4%. All right, I'm just going to put it on here big and green so you get it. So that's the ticker symbol right there. This is the SPXS. That's the ticker symbol. You can go into Robinhood or Webull or any other brokerage firm, and you can use these very simple, what they're called are ETNs instead of ETFs, right? And that just means that they track a very specific sector, theme, or indice. So this is tracking the S&P 500. And you can see here on the right side, 6.44%. It was up today, crossed over $20. And the last time it was up like this was back at the end of January when the market sank. So if we go back to the SPX, which is the S&P 500 ticker symbol, there's a link in the description for a free account to TradingView. That's where I do all of the technical analysis that you see on the screen. So here you can see the market was down 2%, right? So if the market's down 2%, how come that one was up over 6%? Well, it's inverted, right? So it's moving in the opposite direction, but it's also doing it at a 3 times speed, okay? So just be careful with using those. When anything is leveraged, you can either make a lot of money or you can lose a lot of money, and it can happen quickly. So do be careful. But in this market, I do believe we're going to go down and fill in this hole right here, down to 4,200. I said it all the way back here when we almost tapped it. We were 22 points away from it intraday. But I think the candle wick is going to get down here, touch this, and then I think the candle is coming down here to 4,200 at some point in the future. Don't know exactly when, but I'm holding firm on that. I do believe the S&P 500 will get down to 4,200. If the tomorrow is Friday, right? So like I said yesterday during the live stream, a lot of traders, not investors, but traders, in this market, they're not going to want to hold their positions over a 3-day weekend, right? Because Monday's closed, it's President's Day. With the crazy action that's happening on the Ukraine-Russia border, traders aren't going to want to hold those positions open. So that's going to provide selling pressure in tomorrow's market as well. So just be careful of that, especially as we get into the close. Now, if we go into the 5-minute chart and take a look at today, look at this. Every day, it usually ends like this. The last 15 minutes, we get a spike of selling, okay? Today, the last 15 minutes, we didn't get 3 red bars. We got 2 red, and then the final bar was green. So the final 5 minutes of the day, there was a bit of buying happening. That is interesting. That is very interesting. And if you look at the RSI plus MFI, which is relative strength index plus money flow index, you can see it bottomed out right here. And that is usually a time when buy the dip happens. Now, I'm not saying the market was open to buying the dip today. It absolutely was not. Until the last 5 minutes of the day, there was some buying going on. Just pointing this out. All statistical facts here. All right, so that's today. Obviously, the big downturn happened first thing in the morning. And then again, you see this late morning right here, kind of slow rally ticking up, and then it just dropped right off. And there we go. That's what happened in the stock market for the S&P 500 on the chart today. All right, I'll go back to the daily. There are others that you can look for. For example, if you wanted to short the Dow, for example, you could use SDOW. SDOW. That's for shorting the Dow. And it's just as easily as popping in, buying a few shares if you want to. It was up 5.4% today, right? But again, if the market is bullish and going up, you can lose your money at that point. So that's if you want to short the Dow. And I'll just put that ticker. I should have put it in here so we could always see it. SDOW. That way we can see it every time we come back in here. And then if you want to short the small caps without getting into tricky options, you can do ticker symbol TZA. And again, these accounts that I'm showing you, TZA is the ticker symbol. This was up 7.3% today. These are also leveraged, so they move 3 times quicker, all right? And then finally, if you wanted to short the NASDAQ, you can use TECS, right? And again, this is 3 times. So it moves 3 times as fast, TECS. And I've been using all 4 of these all year long when the market's going red, right? Or we've reached a certain point and on the technicals, they say, well, now's the time that we should be thinking about getting back into being short on the market. And here we are, back to being short on the market. Now, the tech 8.48% today. Yeah, pretty big gain, right? Okay, those are just simple examples that you don't have to get complicated into options to figure this stuff out and make money when the market is going down. All right, so let's talk about this. Stocks, they totally sunk below S&P 500. It's 200-day moving average today. Stocks totally deepened their losses as the day went on. And the lows that were hit today, were about a 3-week low today. The Dow Jones ended the day down 623 points lower. The S&P 500, it dropped 2.1%. The Nasdaq slipping 2.5%, and the Russell 2000 also falling 2.5%. As risk sentiment, it remained pressured by negative sounding Russia-Ukraine headlines. And President Biden also came out and reiterated a warning that Russia could invade Ukraine in the coming days. And I think if Russia is going to really do anything, it's going to be as soon as the Olympics are over, we're going to have a complete shift. Maybe the athletes get home, maybe not. And then, boom, a tragedy happens. Now, earlier, NATO had stated that it had not seen Russia pulling back troops from Ukraine, but instead more troops on the border. Ukraine's borders, while Russian news reported mortar fires in eastern Ukraine this morning, it's as risk averted weighed down the bond yields also today. Bank stocks fell because of it, including Goldman Sachs and Wells Fargo, which had released upbeat forward guidance. So even though it was good on the earnings side, because of the bond market coming down, it wasn't so good for banks. Now, the bond market, when rates are coming down, that means less people are buying into bonds. When the bond rate is going up, that means people are not getting in there, right? Did I say that backwards? When the yield comes down, that means people are piling in, right? Because as more people pile in, the rates come down. As rates go up, that means people are leaving the bond market. So that's how the rates work, right? People come in, rates go down. People come out, rates go up. Rates go up to attract people to come in, and then rates go down. So that's how it works. So if I said it mixed up in the beginning there. All right, now among other earnings, we also had Walmart, Cisco, Applied Materials. They all topped expectations. Economic data, it didn't work well for the market either, and totally was in the opposite direction of working in favor of the markets, with initial claims unexpectedly rising last week. And when the jobs report comes out later on for February, last week's the week that they use to help compile their information. So that could also put a bit of pressure on jobs report when it comes out in March. Just thinking. All right, housing starts also, they fell much, much more than expected to its biggest drop in 6 months. Now, the key takeaway from the report is that understanding that single family starts declined in every single region in January except for the West. The West was actually up 15.7%, but every other region across the US was down, which is likely a function of labor shortages and supply constraints that will keep new supply limited and home prices elevated for the foreseeable future. Now, it's not a good thing for Americans because many are being priced out of the market. Yeah, that's right. A lot of first-time home buyers won't be able to buy that home this year because they're being priced out. Rates are already starting to go up on mortgages. We've seen that from the data as well. So, housing market not looking good for buyers, but of course it's still good for sellers. But then again, when you reach a point where many Americans are priced out of the market, that's not very good for sellers either, right? Okay. All right. Without any signs of de-escalation in Eastern Europe, there was little efforts to buy the dip today, except for the last 5 minutes of the market, which contributed to an orderly retreat in stocks throughout the day. 9 of the 11 S&P 500 sectors closed in negative territory. led lower by information technology down 3.1%, communication services down 3%, and consumer discretionary down 2.6%. Consumer staples were up 0.9%, and utilities barely did it, 0.1%, but it was up. Those are the two that closed higher as part of a defensive shift in the market. Now, Treasury saw increased demand, pushing the 10-year yield down 8 basis points to 1.97%, and the 2-year down 5 basis points to 1.47%. Gold did the opposite. It was up 1.7, and let's actually type in gold here and look at the price action here. Gold rose 1.7% and cracked $1,900 an ounce for the first time in a long time, right? All right, so here's gold right here. You can see for the day, it cracked, it got to 1901 and 12 cents. So $1,901.12 today. That is a big psychological number for gold, right? 1900 an ounce. It's been a while. We have to go back here and let's see. It only happened on one day here. June the 1st, 2021, gold was in a rally, and intraday and for the close, it got into the 1900s. It got as high as 1916 on June the 1st. And then we have to go back even further. It would be right here. January the 6th, 2021, and gold popped to 1959 an ounce. All right. So, something that we have learned here from this 1900 number, let's get the chart up here like this. If we look at 1900 and this top black line going horizontal here, it's at 1908. I want to drop it as close to 19. All right, 19 even and 16 cents. So as close as I can get it. That 1900 line, whenever gold gets above it, it's almost like there's an immediate sell off, right? Like those who are trading gold futures, they buy into the market when it gets up there and it's rocketing higher, and then it hits 1900, and bam, it's like they've got sell orders already in there ready to go as soon as it crosses over $1,900 an ounce. And that's been the pattern now going back, well, I mean, we got to go back to November, October of 2020, where it still happened, but gold was getting up to 1918, 1930, as high as 1962, and then immediate sell-offs right after that. So am I saying we're going to have an immediate sell-off in gold now that it crossed 1900 an ounce? Well, the probability is there, and we can see it on the chart. Data shows us that yes, it does sell off immediately the very next day after breaking 1900. So it could happen. Then again, the whole war with Ukraine and Russia happening, potentially happening, hopefully it doesn't, that could send gold just going up even higher. Here in July 27th of 2020, gold broke above 1900 an ounce, and it went on a rally to 1979 an ounce, held there for a couple days, and then finally peaked going way up there. What would this be? Breaking $2,000 an ounce by August 7th of 2020. It got to $2,075 an ounce. And then it took a big fall the very next day, all the way under 1900 an ounce. All the way under 1900 an ounce. It actually came down and got as low as 1863. So we see the pattern. It's right here before our eyes. Is it going to sell off tomorrow, or will the Russia-Ukraine news send it up above 1800 an ounce to close up there, maybe even higher? It all depends on the macroeconomic and what's happening. I mean, we can look at the RSI plus MFI, and they both are saying, okay, time to sell. We have gotten to the top of where we usually are when selling pressure comes in. So just pointing the historical movements here of the chart out, obviously there is too much external going ons, right, to really say technically here's what's going to happen or here's what may happen. The probability is just factoring in too much of outside noise that's we can't control, right? We don't know what Putin's going to actually do. All right, moving off of that, let's jump into crypto. All right. Real quick though, before I do that, the CBOE volatility index that did jump 15.7% today. Now, Walmart and Cisco, they both performed pretty well following their earnings report. Walmart, I think, is a good one to get into with our current economic situation. But growth today, they did not. Nvidia, Fastly, Matterport, for example, poor old Matterport, uh, they didn't do well. The mega caps received no love today either. The Vanguard Mega Cap Growth ETF, ticker symbol is MGK, fell 3% versus a 1.8% decline in the Invesco S&P 500 Equal Weight ETF, ticker symbol RSP. Now, oil prices normally would have reacted positively to the geopolitical threat, but today it declined 2%, among reports suggesting that a nuclear agreement with the US and Iran could be reached, and an agreement like that would free up Iranian oil exports to hit the market and flood the market with their goods, right? With their oil. All right, here's where we stand year to date. Of course, things have gotten a little more down year to date because of today, but the Dow Jones is leading, down 5.6% year to date, followed by the S&P 500 down 8.1% year to date. The Russell 2000 skirting correction territory again, down 9.7%, and the Nasdaq completely in correction territory, down 12.3% year to date. So it did slip back into correction territory today. All right, let's look at Bitcoin, BTC, USD on the chart, and then Ethereum, and then we'll talk about Palantir. Okay. Ethereum, it was down 7.2% today, 40,701 right now, and something interesting is occurring. It's barely moving right now. Usually, Bitcoin, Ethereum, cryptocurrency, it is constantly fluctuating that price, but it's not doing that right now. 40,718. And it's just sitting there. 40,718. Still just sitting there. Barely moving. That is very odd for cryptocurrencies. All right, let's go to either ETHUSD on TradingView, and there is a link to a free account in the description if I didn't say that already. And there were a bunch of earnings that came out today, but here's Ethereum down 7.26%. Now it's kind of fluctuating a little bit. It's at 28.97 right now, but the fluctuations there it finally went to 28.98. It's really just moving pennies, which is odd, right? Usually it's just fluctuating in price, tens of dollars at a time. So I find that interesting. It's like both Ethereum, Ether, and Bitcoin have both kind of hit a bottom where they really want to just be held up and they don't want to go down any further. It's what it seems like to me. Almost like there's an equilibrium here of buyers and sellers at these price points, which is, it looks like Ethereum at 2,900 and Bitcoin at 40,000. That makes sense. That absolutely makes sense. Now, Ethereum for the year is down 21.16% for the year, and BTC USD, I forgot to check to see what Bitcoin was for the year right now, sitting at 40,730 right now. It's down 11.8%. So Bitcoin is outperforming Ethereum year to date so far. So that's interesting to watch because Bitcoin, of course, really underperformed compared to Ethereum last year. All right. Looking at Bitcoin, the only thing that I can see on the chart for why it might have this equilibrium here, 40,000, yes. And the 50-day moving average and the 21-day moving average, they're almost right here together, but the price right now is down under both of those moving averages. So I can't really say that it's those moving averages trying to help keep it up. I just really think it's the mentalness of what 40,000 represents, right? 40,000. It's got a strong mental control. Round even numbers in the markets always have significance for traders specifically. Investors, not so much, but still, it means something. It's got more meaning there to it. All right, let's talk about Palantir. PLTR is the ticker symbol. Palantir Technologies, it's down now 15.7% today. It is up 1% though in the after hours, which is interesting. It is year to date down 35.3%, and over the past year, it is down 53.2% in the last 365 days. Wow. 50.9% in just the last 6 months. Okay, let's get into this. Now, when I talk about Palantir, it's not all bad. So let me just start with a disclaimer. All right. Palantir's earnings had some things that were not good and some things that were good. And we're going to touch on all of them. First off, let's start by just getting this out of the way. Palantir is getting hit hard by sellers after the company missed earnings expectations slightly in Q4. Okay. If we pull this up, it shows us that Palantir reported EPS at 2 cents per share. The estimate was 4 cents per share. Why did that disappear? The estimate was 4 cents per share. So it missed by, well, that looks like 50% to me, but they're calling 2 cents, 43.5% that they did miss. Now, its revenues did beat estimates for Q1 22, with sales guidance that was also above estimates. Now, on revenue, they came in at $432.8 million. The estimate was $417.6 million. So they beat it by $15.2 million or 3.64%. That's great, right? But those were not enough to garner investor enthusiasm, especially when Palantir trades at an eye-popping 62 times forward earnings. Yeah, the software-based company, which provides, from what we know, data analytics tools for governments and private organizations, has been stuck in a downward trend. And we can see this. Look at this downtrend. After shares initially skyrocketed, look at this as we tighten in the chart, as we bring it in. Look at this. Look at this. There we go. We got the whole thing. This is the daily view. Each candle represents one day. January 27th, 2021 is when it hit its all-time high. Its all-time high. So after its DPO, its direct offering at $10 per share, it skyrocketed over 400% after 4 months after the company's September 2020, DPO instead of IPO. They have since cooled off significantly, falling back down towards their initial price of $10 a share. In fact, as of yesterday's close, Palantir stock had dropped over 24% to start the year. We can see now that it's down more. So the big question here, the big question for today with Palantir, why has the stock been unable to get back on its feet even after the company presented solid revenue growth and upbeat guidance for in Q4? Well, one reason that investors have shied away from the stock is its high multiple. Before today's earnings report, Palantir traded at around 70 times forward earnings. The company expects to grow revenue just 30% or more through 2025. So you could game out where they're going to be by 2025 by adding 30% to their revenue each year, which may not be enough to justify its valuation, particularly if that growth is coupled with EPS misses like today. Also, government revenue growth, which typically makes up over half of total sales for Palantir, continued to decline in Q4, rising just 26% year over year, a considerable slowdown from the 76% growth in Q1 21, 66% in Q2 21, and 34% in Q3 21. That's a steep decline. And I'm sure you can see the pattern of it slowing down. Investors were also worried that the arrival of new administration combined with the U.S. pulling out of Afghanistan could soften government revenues going forward. I know last quarter there was big talk about that. So the mild government revenue growth may be adding to the selling pressure. Now, aside from those rough patches, Palantir still delivered a few notable highlights. For one, as a software company, Palantir boasts an impressive gross margin. Impressive. The figure expanded by over 480 basis points year over year in Q4 to 82.9%. That is incredible. Also, commercial revenues jumped 47% year over year, an acceleration from 37% increase last quarter. Moreover, U.S. commercial revenue soared 132%. The strong commercial growth is a very encouraging signal that perhaps Palantir software tools are becoming a critical component of private companies' businesses. However, Palantir's highlights come up short in the wake of a high multiple, slowing government revenue growth, and a Q4 earnings miss. Palantir's secrecy, due to its CIA ties, don't help out either. If you asked around, sat down at a table with, 50 people around, 10 people, it doesn't matter. How many investors can actually tell you what Palantir does? Not very many. And without the company fully explaining each aspect of its business, investors may overreach to slight earnings misses and mild results, like today's 15.7% decline. Bottom line, I do caution investors who want to jump in to wait on the sidelines, as its high multiple could trigger additional selling going forward. I do think that Palantir may be hitting a bottom, though, somewhere around $9 a share. When we look here a little bit closer, let me squeeze this up so we can get down to that $9 a share, okay? Which sits, we're going to go 901 is the closest I can get there. Bang. I don't want it to be green. That's the bottom. Let's go over here. All right. Let's look here. When it went public, $10. It came down, and look at this, okay? It came down, and there was a good amount right here, 3 days in a row, where, let's see, it opened at $9.06 and it closed at $9.20. The next day, $9.43, $9.03. The following day, $9.04, $9.90. So there is support, at least when the company went public, at $9. If we go back to where we are now, okay, there will be support at $9. Now, there's also support for Palantir real close to $12 where it's at right now. Real close. If I take this to right on $12, you can see there that it did bounce off of that line a couple of times. Now, there was also really good support, even though it's nowhere near it right now. There was good support right here at $18 a share. I mean, it really tried to stop and hold at $18. It really did try. It tried hard back in December and January. But of course, there was nothing under $18 to support it until it got down to 12. And now I don't think there's much to support it under 12 until it gets to 9. And I think that's the bottom. So that's why I think that Palantir is nearing a bottom. I also believe that Palantir is a good company that you should definitely be keeping on your radar, as the global digital transformation bodes really well for the company in the future. Also, Palantir is within a few quarters of being profitable if it continues to flatten out its cost like it did in this quarter. So that's my thoughts there on Palantir. Let me know what you think in the description down in the comments, I mean. All right, I will be posting our updated top 10 value stocks list this evening for members. So make sure you click that first link in our description or in the live chat and become a member to get instant access to our top 10 value stocks, growth, dividend, and momentum stocks. That's 40 high quality stocks ready to choose from and so much more. We've done the research so you don't have to. Okay, if you found this video to be helpful, informative, actionable, then click that like button and grab the URL and share this video wherever you can. That really helps us meet our goal of financial freedom for everyone. All right, ladies and gentlemen, thank you so very much for joining me today. And I loved it. And if you're watching the replay, make sure to leave a ticker symbol in question in the comments, and we'll go over it during tomorrow's show. All right. Thank you so very much for watching, and I'll see you in the next video.